Woods is with us, Chief Global Strategist, Freedom Capital Markets. Thank you for being here. So yesterday we saw the worst day of the year for the Dow. I mean, obviously huge sell-off. And a lot of times when you do have a big sell-off day, you'll have up arrows today. You said you're a little surprised to see some up arrows today. Why is that?
Yeah, well, it just shows how resilient this market is. This reminds me of when the FOMC had their press conference 2 weeks ago and they kept rates unchanged. We had that 1.5 point sell-off in the S&P 500, and after the run we've been on since the October lows, you figure, okay, we may have that normal 5% correction, normal pullback, and the market kept going higher. Same thing today. There was momentum to the downside until 3:30 yesterday, and we got a little bit of a rally. Some key levels held in the major indexes, especially the Russell, and that gives us a little optimism that this is a bull market, and it's a resilient bull market at that. So yeah, a little surprised we didn't have more of a follow through to the downside, but not a bad thing.
So the key levels held. What would you say held for the S&P?
Well, for the S&P, we haven't tested key levels right now. When you're talking the S&P, we are a little out above our skis, as we say.
We hit new highs.
We hit the 5,000. We got the hats. I'll make sure you get a hat. Yeah. And we are now pulling back a little bit. A normal retracement to me would be 5%. We are a little overextended above the 200-day moving average, 11% above it. Once we usually hit that 10% mark, we either pause, digest, or we pull back. And I looked at other times where we were this ahead of the 200-day moving average, and we did it in December. We went sideways for a little while before we popped in January, and then we did it last July, and we sold off and we retraced to about the 200-day moving average. In this case, given the run, I think a pullback to the 50-day moving average around 4,800 right now, that would be what we consider a normal correction, a 5% pullback from the top. And given that there's not much news outside of some specific earnings we're watching going into the next Fed meeting, given the seasonalities in this market, I think a pause would be apropos, and maybe those highs of 50-50 in the S&P are going to be the highs for the next few weeks.
Ooh, okay. You mentioned small caps. That's something you're focusing on. Tell me a little bit about that quickly.
Yeah, the small caps, we want broadening out of the market rally. And, we've been lifted on the shoulders of the giants for a long time. I see industrials doing well, breaking out. Financials, minus the regionals, have been doing well. And then healthcare. These are the three biggest components of the Russell 2000, 49% of that index. So to me, seeing that broadening out, seeing these sectors start to lead, continue to lead, is a good thing. The Russell had been in a sideways zone for 18 months, finally broke out of that. People were fearful that this was a bull trap and we were going to pull back. We have, but we haven't pulled back to major levels. It's a normal retracement to me. This is a healthy rotation and a healthy correction in the Russell, and the fact that we're up today after yesterday's big sell-off is positive.
So where do you see, because people try to be patient when it comes to investing in small caps, and they've been somewhat disappointed. It started to show its head, but the truth is it hasn't performed like the other indices. Do you think that, you said IWM, is that a pick for you? Do you see
IWM is how I monitor the Russell. That is the ETF that follows it, so it's the best way to trade it.
Or are you just watching it?
Well, I'll say it's a pick because I think you can buy it on weakness here with a risk-reward setup that if it breaks the 50-day, 2 days where it closes below it, get out, take a little loss, and then get back in. There are major levels of support here, but I think it's changed, and I think it will start to broaden out and slowly rally. Will it make new highs? No, but if it does, that's a 23% rally from current levels. So it does have something to reverse. The story with IWM, the Russell, are rates. They've been anticipating those 6 rate cuts where I still don't know where we got that number. I think 3 is realistic, and once you get that cut, maybe that'll be the catalyst to finally get the small caps to rally, because they're affected by higher rates for longer than the big caps are.
Maybe you're not surprised to hear this. Nvidia now becomes the 3rd largest U.S. company, passing Alphabet, Google's parent, Alphabet. So it shows you just how huge it is. Recently had highs of 746. What do you think about a name like Nvidia? I feel like I have to circle back for folks because they've watched it run up.
You cannot talk about the stock market and what's been going on if you do not mention Nvidia.
Do you like it?
I love it over the long term. This has been one heck of a run. If you are lucky enough to be in it, you may want to take some profits because it's going to be the largest part of your portfolio given the run it's been on. 3rd largest company, it makes sense. It is the AI play of all AI plays. I yield to a man like Dan Ives, a guest on your show, who says we're in the early innings here. I agree with that thesis. I agree that this is just playing out, but all roads through AI lead through Nvidia. And to me, this is going to be the most anticipated earnings for next week, for the year, if I say. It's the Super Bowl of earnings. And what can they do to take another leg higher? It's going to be very interesting to see what Jensen Huang says on his conference call.
I don't want to leave out Bitcoin. We saw Bitcoin when it got to 50,000 this past week. It was exciting because we hadn't seen Bitcoin at 50,000 in over 2 years. Now today, 51,000. What do you think about Bitcoin? A name like Coinbase, Gary Gensler still out, noting the risk that you see in these kinds of things. But how about something like Coinbase? Is that something you like?
It is. Their earnings are out tomorrow after the bell. We've seen crypto-related stocks do well this quarter. Coinbase having a good day today. Technically, it had a nice run. It pulled back. It held that key 50-day moving average around 145. It's about 150 today. I anticipate they're going to have good numbers. And given that Bitcoin finally has that stamp of approval from the SEC, the spot Bitcoin ETFs, it is a legitimate asset class. That is here to stay. And I think seeing the people that now, because it has that seal of approval, they're getting in. They're putting a portion of their portfolio into crypto assets, and Coinbase could be the biggest recipient of that because they want to do it directly. There's no better place to go than Coinbase.
Right. All right. Thank you so much. It's great to see you. Really appreciate it. Jay Woods, thank you for being with us.